that was that 100-person company, 150. Our projections are showing over $100,000 worth of savings first year. If they hit our projections. If they blow things out, big problems happen, then we're going to be close to what they were paying last year. But we have such a huge window of opportunity, huge margin of opportunity, that it was worth taking another direction, changing them to a new carrier. So the big factor on that one was the auto and the workers' comp. It could be different for different companies. But that one, the auto, they had 80 vehicles on their policy, and it was with one of those strip mall type of insurance companies, as I call them. Not the best fit. Not the best fit because of the resources and the ratings. It's fine for a brand new company. It's not so fine when you have 80. They don't care about having 80 vehicles. The other carriers, you got 80 vehicles, that's a spread out of risk. You're going to get discounts because of that spread of risk. This was pretty typical. It's a family-run business. Well, it still is a family-run business, but they started small and they bought it from the guy that had a little office in a strip mall. Right, they bought their insurance that way. But they really did a great job growing their business, and they ended up having, well, by the time I got there, 150 employees. Well, that little strip mall insurance company that they bought it from is not designed to provide coverage for 150 employee organization, right? There's certain carriers that are really good at small business and turnkey and get you there, get you done, get you cheap. But when you grow that much, you need to look at other opportunities, other avenues, because what was looking good 10 years ago it's not the same profile anymore. So a lot more different operations, a lot more claims activity, a lot more resources available to the clients if they go with the right fit. Really, it's the right fit. And 100-person company is not necessarily best served by any of those what we call direct writers.
Another scenario where we brought Harold in, we got a client that is in the tech software business, right, and had a opportunity with a potential client that was government based, right. They had an RFP with a requirement for some insurance, and Harold came to the table. So tell us kind of about that situation.
So that was pretty typical development of the company. A much younger company. They started out with that first general liability policy and then bought the property and so they stack these things, but during the course of the year they all have different expiration dates, contract dates. And so if you consolidated that all together along with the workers' comp, that was a separate carrier, be much cleaner, much easier to renew on an annual basis.